Hey everybody, welcome to Mortgage Today for Thursday, June 6th, 2024. And oh, what a day it was. UMBS were down 8 basis points on the open. S&P Futures were pretty much flat. We've been anticipating this week's data for the past 3 weeks. It has been delivering on the promise of increased motivation for the bond market to make rates better. That motivation has been almost exclusively towards, to make matters better, that motivation has been almost exclusively towards lower rates. Today is the first day without any top-tier economic data, and coincidentally the first day without a decisive rally in bonds. That said, there's no decisive selling either. It is shaping up to serve as a very logical day of consideration ahead of tomorrow's job report, which in turn might not pack a punch with CPI coming next Wednesday. The morning's only big-ticket event was actually the ECB announcement, but it hasn't produced notable reaction, especially not in the U.S. bond market. The ECB cut rates for the first time since 2019, which was not only 100% expected, but almost 100% telegraphed by the ECB. The service economy accelerated in May, according to the ISM Services report. April contracted slightly, which broke a 15-month string of advances and is now looking more like an outlier than a change in trend. Employers announced 63,816 job cuts in May, according to Challenger Gray and Christmas. Employers announced 63,816 job cuts in May, according to Challenger Gray and Christmas job cut report. Employers announced 63,816 job cuts in May, according to the Challenger Gray and Christmas job cut report. This is a 1.5% decrease from April. Job cuts remained flat in May as companies assess performance and make plans for quarter 3 and quarter 4. Meanwhile, hiring announcements are at their lowest level in decades. Estimates of 2024 quarter 2 GDP growth are quickly sinking as more data becomes available. The Atlanta Fed is now expecting quarterly seasonal adjusted annualized growth of 1.8%, down from 4.2% in mid-May. Similarly, the New York Fed also sees growth at 1.8%, down from 2.75% in late April, and the St. Louis Fed sees growth of just 1.2%, down from 1.4% last week. Average all three gets 1.6% economic stall speed. Stocks and bonds experienced a lull ahead of the U.S. jobs report, crucial for the Federal Reserve's future decisions. Equities hovered near all-time highs with mixed market sentiment. 36% of investors anticipated a risk-off move, 33% anticipated risk-on, 31% saw favor, and 31% foresaw negligible to mixed reactions. Treasuries fluctuated while the euro strengthened due to the ECB raising inflation forecast following a rate cut. As Wall Street awaited the payroll data, jobless claims exceeded estimates, labor costs rose less than previously reported, and the trade deficit widened. The anticipated report suggests that U.S. added 180,000 jobs in May with steady unemployment rate. The S&P 500 remained stable after its 25th record in 2024, with the U.S. opening antitrust investigations into Microsoft and NVIDIA over AI domination. GameStop saw a boost as Roaring Kitty announced a YouTube live stream. U.S. 10-year yields hovered around 4.28% with expectations for Federal Reserve rate cuts in November and December. Investors remain divided, balancing between economic slowdown evidence and rate cut implications. A pre-payroll survey showed varied investor strategies, with 33% planning to sell strength and 54% ready to buy a dip. Analysts anticipate that moderating growth could benefit stocks, but rate cut reasons, whether due to inflation slowdown or growth deceleration, will significantly impact corporate earnings. Although bonds continued to improve yesterday, the pace of gains has progressively slowed throughout the week. Our base case was for that momentum to shift sideways or pull back a little bit today, and that's exactly what we've seen. It was a base case because it would be a logical move for the market that is leaning in a bullish direction as it awaits the data with the power to endorse or reject bullish leadoff. 5 straight days of gains plus counterintuitive rally following ISM services was plenty. Today's relatively flat performance is actually just another indication of latent optimism for friendlier data in the future. As for the big show, it remains to be seen how much of the spotlight goes to the Friday's job report, and with next week's CPI continuing to be the top of the marquee. UMBS ended the day down 3 basis points at 100.69. So at 100.69, we're still up here in this relatively wide range. Got our ceiling at 100.872, and then a whole bunch of technicals converging upon each other at 100.427.